Hi, this is Mike Riley, loan originator in Orlando, Florida, and today I wanted to talk to you about the monthly mortgage payment. Too often people call me after they're under contract and say, "Hey Mike, what's my payment going to be on this house?" Well, the time to have that conversation is before they sign an offer and not while they're under contract. Let's take a look at a typical mortgage payment. Let's assume a sales price in the low 400s where people are borrowing $400,000 as a loan amount. The first component of the monthly payment is the principal and interest. It is true that in the early years of a loan, not much money is going to principal, and most of this payment, this portion of the payment, is going to interest. A lot of times the customer mistakenly thinks, oh, that's how the mortgage company sets it up, where you pay interest on the more interest in the early years of a loan. That does happen, but that's not the reason it happens. The reason people pay more interest than principal in the early years of a loan is because you owe more money. You pay more interest on the credit card when your balance is $5,000 than you do when your balance is $200, right? It's just mathematics. Of course you pay more interest in the early years of a loan. You owe more money in the early years of a loan. At a 6% fixed rate, which is just for example's sake, the principal and interest part of the payment is $6 per month for every $1,000 that people borrow. So if somebody's borrowing $400,000, well, 6 times 400 is $2,400 a month in principal and interest. So when people are asking you, oh, what's the payment going to be? For the most part, it's a pretty good guess just to take the number 6 and multiply it by how many thousands of dollars they're borrowing. In this example, on a $400,000 loan, that gets us to $2,400 a month. A lot of times when people are using online calculators, they quit there and they think, oh, I can afford this house. The payment's only $2,400 a month. They're not reading the fine print on a lot of those websites where, hey, this is assuming a certain sales price with a certain down payment amount. So people need to be careful if they're doing this at home. The next component is property taxes. Property taxes can vary a lot because currently they're based on when the house last sold and how much it sold for and whether the current owner is living in the house. If somebody gives me an address, I can look up what the property taxes are now and I can tell them what their mortgage payment's going to be now. I can also estimate what their property taxes are going to adjust to later next year when the county changes the property taxes or adjusts the property taxes. For the most part, people want to know, well, what's my monthly payment going to be now? Which I tell them. I also, once we get down to the bottom here, I also go back and say, now, remember, next year, I do anticipate your payment increasing by X number of dollars because the county is going to raise your property taxes once you buy the house. The third component is homeowner's insurance. And the answer to a lot of mortgage questions is it depends. This really depends, homeowner's insurance, mainly on the age of the roof, the age of the house, the type of construction. So on a 100-year-old wood frame house with a 30-year roof, the homeowner's insurance is going to be a lot more than $200 a month. But on, say, a 30-year-old house with an 8-year-old roof that's a block home, then yeah, the homeowner's insurance should be around $200 a month or so. The last component of the actual mortgage payment is PMI. That stands for private mortgage insurance, which sounds good, but it's not. It does not insure the customer. It insures the mortgage company in case the buyer defaults. The government makes you pay that. The amount of PMI, it depends. It depends on whether it's an FHA loan or conventional loan. FHA, it's more of a straight percentage. With conventional, it's a function of the credit score and the debt ratio. Let's use an average PMI amount of $250 a month. So if somebody said, hey Mike, what's an average mortgage payment on a $400,000 mortgage amount with a low down payment? I tell them that these four numbers here add up to $3,250, which is a lot more than this $2,400 number, which is what a lot of buyers think their payment's going to be. Down here at the bottom, with the big red asterisk, HOA dues. Those are not part of the monthly mortgage payment. They're not included, but the buyer really needs to know what they are for their own monthly budget so that there are no surprises later. Again, it's just a quick calculation. If your buyer calls me before they make an offer, I can let them know, hey, here's how much money you're going to need to buy the house. and here's the monthly payment that you're looking at. Of course, they can choose to buy the rate down, and I can talk about that with them as well. But for the most part, that's the calculation that I do with them. For more questions, just call me. I'm always glad to help.